Okay, the solution to Lisa's pencils. First, I pulled out all the facts of the case. So we know that the minimum price is 35, the maximum price, material costs, the cost of buying the machine, the cost of renting the machine, which is per year, um, the cost per month for both the filling and the Abington stores, and the cost per month of the website, the Google ads, and the Facebook ads, and the increases that they cause. Now, the case was to help her build a projected income statement. Um, and so we need to figure out, how much can she make in a year? Um, First, let's do it per month. So I need an income statement based on a month. I will need revenue, cost of goods sold, and the difference between them would be my gross margin. So this equals revenue minus cost of goods sold. And my expenses are, let's see, what does she have expenses? She has location rent, whichever one she ends up picking. She also has machine rent if she chooses to rent the machine, machine depreciation if she chooses to buy the machine. Anything else? Web fees if she has the website, Google ad fees if she gets the Google ads, and Facebook ad fees if she gets the Facebook ads. And all of these together give us our total expenses. So let's go ahead and sum that. So these are our total expenses. And the difference between gross margin and total expenses is our gross profit. Gross margin minus total expenses. And it doesn't mention tax rate in the case, so for now we can leave that out. Now, the decisions that we have the location decision, which is either A or B, well, A or P, Abington or Philly. What other decision do we have? We have the machine decision, and that's rent or buy. Website, yes or no. Google ads, yes or no. And Facebook ads, yes or no. And because these are my decisions, I'm going to code them yellow. And right off the bat, I can see that since I'm talking about a month here, but some of the stuff over here is a year, I'm going to need an assumption that the months per year is 12. Okay. Now, to get revenue, what I need is quantity times price. And price is one of my decisions too. So I need quantity times price. Let me push this down a little bit. So I'll have my base quantity. My base quantity comes from the equation, which says that quantity is equal to 3,000 divided by price. And if the price is the minimum of $35, then my quantity is 85.71429. And I'll have an additional quantity due to website. So if I have a website, then I'm going to get an extra 20%. So And let me go ahead and add all of those. So we additional quantity due to website, additional quantity due to Google, and additional quantity due to Facebook. Now this is equal to if website is equal to yes, then it's Google sales increase or 20% times the quantity, else it's 0. Now this one is equal to if Google Ads equals yes, then it's the Google sales increase times the quantity, otherwise it's 0. And finally, this one is equal to if Facebook ads is yes, then it's the Facebook ads sales increase times the quantity, else it's 0. So if I put a y here and a y here, I get my numbers. And my final quantity is equal to the sum of all of those. And when I look at that, I see that I have a fraction, and I can't really sell a fractional part of a pencil, so I'm going to wrap this in floor. Comma 1 to round down. And revenue, as I was saying, is price times quantity. Okay. Cost of goods sold is quantity times material cost. Okay. Location rent equals if location is equal to A for Abington, then the location rent would be the Abington rent, else it's the Philly rent. Okay, the machine rent is if machine equals R for renting, then we want the machine rent. But notice this machine rent is per year, so we'll need to divide it by 12 to get what it is for per month. Otherwise, we're not paying machine rent, so it's 0. So we can see that if we rent, machine rent is there, it's $35 a month. The machine depreciation is equal to if the machine decision equals buy, then it is, now truthfully it should be purchase price minus salvage divided by depreciation period. But I'm just, no, let's do it the right way. So the machine costs minus the salvage price, which I'll put here, divided by the depreciation period equals my depreciation for a year. And if I take all of that and divide it by 12, it is my, actually I can do that in the end. In this depreciation period, comma 0 is nothing, take the whole thing and divide it by the number of months in a year, and I have my depreciation for the year. And I believe I said that I was going to put the salvage value here, 0, and depreciation period is 3. Okay, so if instead of renting, I buy, you can see it went out and automatically figured out what the machine depreciation would be. It would be the 1220 minus 0 divided by 3, and then took that and divided by 12. All right, so web fees equals if website equals yes, then website cost, otherwise 0. And it's the same for the other two. And the reason I put them in the order that I did is so that I could just copy them down like this. See? And so this is already set up. If Google Ads is Y, then Google Ad cost is 1,000. And this one is already set up. If Facebook Ads is Y, then Facebook Ads is 2,000, otherwise 0. We total the expenses. The difference between the gross margin and the total expenses gives us our gross profit. If we take that and we multiply it times the number of months per year, we get how much gross profit she'll make in a year versus how much gross profit she'll make in a month. And that's how we solve the Lisa's Pencils case.